Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, April 25th, 2023. Before I click on all these charts, please click like and subscribe. Helps me and you both. Check out wickedstocks.com as well. We offer a subscription package, $47 a month, for a full assortment of analytical videos like Tesla and like Apple, Daily Triple Q, Daily SPY. We do 2 individual stock picks every week, 5 to 10 minute video format that you never see on YouTube, weekly analysis on the S&P 500, NASDAQ 100 indexes, and the long bond ETF, the TLT. So check us out. We offer a 5-day free trial. Anyway, that's all I have for that. Let's talk about the Tesla chart here, the weekly chart. This is a range of significant overhead resistance that is in reach over the next, I don't know, could be 3 to 5 weeks, could take the better part of 2 months. And that is to say, holding above this zone of support. Now, we didn't test 154.05. It's been an objective now for a couple of weeks following the settlement below this rising channel bottom, presently at 194.47. So 154.05, as I've been saying, is the start of a range down to 146.06. You can see lower right here that can absorb selling through May, even perhaps through June. And from here, we can rotate up over the following couple of months or less to that 223.54 long-term channel top, which is here. And there are intermediate channel structures now, more horizontal in nature over the last few months, from the February high at 208.82 on the weekly chart, converging, gradually narrowing, able to contain buying into later year. And if settled above, would mark a good long-term low for Tesla with meaningful bullish continuation then anticipated into later year. But we are a long way from that right now. Let's get back to the day itself. I'd mentioned how 154.05 is meaningful support, has been an objective now for a couple of weeks. Let's take a look at the same chart, but we're going to add a few things here. We do have a descending channel bottom that has been containing the selling pressures pretty well. I've reduced it to a minor point last week. Still remains minor only. You can see lower right here, but it is a level that is well suited for day traders, aggressive day traders. And from here in this local area, just minor points, all well suited for aggressive day traders. But in terms of daily tempo, in terms of the market dynamic for the day itself, 165.65 holding below Monday's high will keep this 154.05 channel bottom in reach, where once again it marks the beginning of a range of longer term support, midterm support anyway, down to 146.06. 146.06 is a 5/8 downside Fibonacci from the January low to the February high. And this is narrowing zone, able to absorb longer term selling. And I'll just say through May and into June. And once tested, we can rally nicely over the following month or two of trade into the 210s, 220s, 209.24 is a channel top on the daily chart. That you can see here. In fact, let's go back. I jumped the gun a little bit. I'm going to go back to this chart just for the day itself. So you can see 165.65 lower right here, intraday resistance, below which 154.05 in reach, above which pushing or opening above 165.65 should yield 172.92 within the day. That is that former low settlement price back in early March before we rallied back to a pullback high at that point in early April. I think just for the sake of the day, that could be it. Although I don't want to get in the way of a potential rally here, we have, we are closing in on meaningful support. I thought about making 172.92 stronger than it is, but, I don't think we should overemphasize it. I do think if we close above, and this is the point I really want to make, if we close today above 165.65, then the upper 170s are likely just over the next few days. And that is, if you can imagine the high here of this bar, this last bar, that's Monday's high, 165.65, not labeled. If we close above it, we're probably a 2 to 3 day rally, nice rally into the upper 170s. This 177.39 to 178.03 area can absorb buying through next week. And from there, we can fall back into the 150s again, quite possibly all the way back to that channel bottom that you see here at 154.05. So once we test the upper 170s, if we test the upper 170s, then we can fall back to 154.05, this channel bottom, within a week or two of doing so. I suppose I could have put both on one chart. That would have made more sense. I can talk about the 1 to 2 week time frame. Bottom picking 154.05. If you're a 1 to 2 week time frame trader, then you're now going long at 154.05, holding out for the upper 170s where you can take profits and perhaps even play the short side. When we push into the upper 170s, you may consider reaching for, the mid 150s out of the money put, the 154.05 out of the money put, not 154.05 out of the money put, 154, 153. You pick the strike, really, but that would be the idea. That once we test, if we test the upper 170s, 177.39 to 178.03, you could then reach for a 154, let's say, out of the money put that doesn't expire for at least a few weeks. That is sort of the 1 to 2 week time frame right now. But 154.05 also is representative of longer term support, 4-star multi-week support, able to contain selling through June perhaps, and you can bottom pick this area. You can take profits. I've been mentioning over the last few weeks, when we had a couple of sell signals, you may reach for 145, 155 out of the money puts that don't expire for at least a few weeks. We are closing in on our target now, and so you cover that position, and you may, if you're a nearer term trader, as I said just a moment ago, reach for upper 170 out of the money calls that don't expire for at least a couple of weeks, or you could reach for 205 to 215, this 223.54 dropping gradually, 205 to 215 out of the money calls that don't expire for at least a couple of months. You may go further out than that. And, in terms of the upside, it would be a settlement in the coming days above 178.03 that would prompt then certainly reaching for those 210 or 220 out of the money calls that don't expire then for at least a month or so. I would call this probably a 2 to 3 week rally. And just keep in mind that this upper area here, 209.24 up to 223.54, is considered in reach, and you could actually almost call it an objective once we test this meaningful support at 154.05 down to 146.06. So once we test this area, this zone up here, and dropping gradually in reach within a couple of months. And, once again, if we were to close above 178.03 in the coming days, just within a few weeks. Trying to think, I will say this, and I've said it before, but if we do wind up settling below the 146.06 level, this low here from early January becomes our next 2 to 3, 3 to 5 month objective, 101 and change. We could continue lower than that, perhaps. We could continue all the way south to this channel bottom, but I really don't want to go there. I don't think it's necessary. It's not that I don't want to go there. I want to be realistic. And so what I think is realistic is merely a retest of the January low if we were in the coming days to close below 146.06. But, I don't know. I really don't know what's going to happen. I let the market dictate my actions. And right now, I'm bottom picking 154.05 down to 146.06. And if we close below 146.06, not only do I bail on that long position, but I play the short side down to 101 and change. I think I've pretty much rounded it out for the day, 8.5 minutes and talking. I'm going to leave it at that for Tuesday's Tesla report. Please click like, subscribe, check out wickedstocks.com. I'll be back tomorrow.